Good morning, good afternoon, good evening. It's December 30, Saturday, 8 p.m. And welcome to our latest episode. This is Mark Yu.
This is Wawi Santos. 2 more days
2 more
before the
days.
new year.
Yes, sir. Another year coming up pretty soon. And 2023 is almost over. And now we're at our latest episode, episode 94. Couldn't think of any better title, but Santa Claus Rally 2. So, what is actually the Santa Claus rally? So I was able to pull up a Google description here on the side. So Santa Claus rally is a period that spans the last 5 trading days of the year and the first 2 days of the next year. So that'll be January 2nd and 3rd. So the Santa Claus rally should technically be ending on Wednesday.
Oh, wow. I didn't know that.
Yeah. Well, that's
That's good to
according
know.
to, yes, strict description and was coined by Yale Hirsch, founder of the Stock Traders Almanac back in 1972. So, just a disclosure: me and Wawi are both healthcare workers, professionals here in the USA, and we are not registered financial planners. We try to record ourselves, discuss the market, the sentiments on a weekly basis. So we just share it online. Well, through YouTube and podcasts primarily. So off we go. The first part of our weekly discussion is the sentiments. I don't know why all of a sudden American Association of Investors want me to verify if I'm not a robot. Okay, so sentiment from the investors here in the US. Okay, as of December 27, bullish sentiments dropped from last week from 52.9 to 46.3. And bearish investors climb up 20.9 from 20.9 to 25.1. So interesting turn of events here, Wawi. I would think it's the reverse, like people getting more bullish. What do you think?
I think people are still bullish about the market. Um, some are probably just reacting to the recent uh, downturn on the returns because people are reallocating. Like we talked about last week,
Mm-hmm.
people are rebalancing their portfolios, doing tax loss harvesting, stuff like
Yeah,
that.
good point. Yeah,
So they're just reacting to the recent downturn.
true,
But
true.
not a lot of there's a lot of tailwind to support the bullishness right now.
Mm,
So it should be like an extended Christmas rally, like the definition of a Santa rally.
yeah, hopefully so, because we get better returns if if the stock market and the markets go up. Um, so
Yeah,
now on the mhm,
we were talking about last year, if we were talking about early last year,
uh-huh,
we won't believe that the S&P 500 will go up this much,
true, yeah,
right?
everything was
So
falling, even during December, I believe.
so it's a complete change of sentiment.
True, definitely. 2022 was definitely bad. Each and every industry was in the red, especially technology. And even I remember Facebook or Meta platforms was down to $100 a share at one point, even a little bit less than that. But it now has recovered, and we're gonna look at some of the best performing stocks too in a second. So next part of our sentiment survey or review for the week is the fear and greed index. So right now we are still at extreme greed, 76 points. Whereas last week it was at 78, so barely budged. Yep. Well, if you know, a year ago the market or the sentiment for the market was actually at fear at this time. Coming
Mhm.
into the new year, fear, 37 points, way down there compared to now at 76. So that's quite a turnaround. So I wonder if it's going to be the same thing for next year. Will we be at extreme greed or neutral or fear? Whoever can luckily guess that and put all in in his money might as well be the next lotto winner or jackpot winner.
So it's gonna be volatile for sure because we have elections coming, and and geopolitics is not yet uh, completed. Negotiations. There is actually
Mm,
no resolutions yet in the Ukraine-Russian
mm,
arena, the Israeli-Hamas arena.
mm.
There's there's two places in the world that's affecting global trade right now.
Sure, and I think China also kind of indicated its plans for Taiwan. Um, in one
Hmm.
of the news articles. Mm,
Yeah, so those are those tensions that are still lingering.
yes, but it's here we go. Xi Jinping reasserts sovereignty claim over Taiwan ahead its election. Oh, Taiwan's gonna have their election pretty soon.
Hmm.
When is Taiwan's election? 2024, January 13. Wow, it's coming up pretty soon. So we'll see who wins. I'm not really closely following that, but definitely a significant political event in the
Hmm.
Far East. So the market momentum. Here we are at 40, where are we? 4769.83. We are ways above the 125-day moving average. 125 days, 4461. That's a lot higher than most of Wall Street Bank's forecast for this year. Way higher. I remember Morgan Stanley is looking at 3,500, even up to 3,000 as early as this year, being projected. But they kind of admit they're fully on predicting the markets this year. So, well, it's not only Morgan Stanley. A lot of banks too forecasted way lower targets for the S&P, which we're gonna take a look at in a second as we go through our 2023 review. So next is the stock price breadth. So the market is still ramping up. A lot of companies, thousands of stocks are being actively traded, and a lot of them are hitting new highs at this point. So that's a good sign of market strength. It's not just Magnificent Seven, but there are other stocks that are getting involved. Put in call options. So not so much activity. It still weighs down compared to earlier this year and of course late last year. We are still at 0.75, but it's good to pay attention to them when it traverses the level one. So that would indicate severe bearishness among investors. But right now we are nowhere near to that. So for the volatility for the past week, 5 days, it's down negative 9.59%. As a result, S&P, oh, interesting. So the volatility is down 9%, but the S&P is actually close to flat for the past 5 days coming into the Christmas rally. I would think it would have done a lot better because of the Christmas rally or Santa Claus rally past 5 days plus the 2 days next week. But actually S&P is flat, 0.33. Do you think the buyers are getting exhausted at this point, Wawi?
No, I think it's gonna surge back again. That's just my guess. Surge back again in January
Hmm.
when people are are back reestablishing positions on their portfolios.
Right. Well, that's for me. It's quite an interesting find. I was hoping we would see still further up, but since we're hitting all-time highs or close to it, I guess a lot more, a lot more. What do you call that? Oh, well, I think you're. Yeah, there we go. Yeah,
Oh, how did that happen?
there you go. So a lot more investors. I don't know. Maybe they're just taking some winnings off the table. But believe it or not, there are still trillions and trillions of dollars of cash sitting on the sidelines who have missed this entire rally that we have gone through. We are record highs in terms of money market, as we have openly discussed on a week to week basis.
Well, I think a lot of that is just waiting to pounce once the once the easing of the rate starts. They're just waiting.
True. And for the NASDAQ, the best performing industry or sector this year. So for its volatility, it's down negative 5%. And that's for the past 5 days. And for its index, it's actually barely flat, 0.03 for the past 5 days. Pretty interesting. I don't know if buyers fatigue or Wall Street just decided to just take a vacation off during the legit Santa Claus rally period, as defined by the Stock Traders Almanac. So weekly performance for the sector, the best performing sector is healthcare, followed by consumer defensive and utilities. The worst performing sectors, no other than the worst performing sector for the year, it's energy and consumer cyclical. So looking at the past 3 months or the last quarter of 2023 performers, all sectors are in the green except for one, energy. Only oil is down 4%, while each and every sector led by technology, real estate, industrials, financials are all in the green. So so for this year, obviously the best performing sector is technology, consumer services, which is kind of like the same, because those are Google and Facebook. And the worst performing sector is utilities. There are actually only two sectors that are in the red: utilities and consumer defensive, believe it or not. So, as a lot of experts were predicting late last year that we're going to enter recession this year, the supposedly stalwarts that would bring your portfolio into safety, such as utilities and consumer defensives, were the worst performing sector of the year. So some charts here from bar charts. We're looking at the Nasdaq Composite. So according to bar chart, Nasdaq had its ninth consecutive green day or green week in its longest winning streak since February of 2019. So that's one Nasdaq juicy information there. And for the money market, so this is what we have just been talking about. A lot of money is parked on the sidelines. $6.3 trillion, all-time high, sitting on the sidelines. So will this be deployed on the 2024 once the Fed cut the rates? I guess we're just gonna find out by March. When is the next Fed meeting, by the way? Let me see.
Aren't they meeting in January? I
Oh,
think they're
okay, here we
meeting
go.
in January.
Yeah, January 30 and 31. So I guess they're expected to hold the rate steady, right, Wawi?
Yes. Yeah. Some are forecasting early March.
Right.
you know, or May before they start easing.
Yeah, I think I saw a report that they're gonna start cutting rates, 25 basis points each and every meeting starting at March. So I wonder if they don't, because fear of inflation at March, then would that spike a volatility event and a sell-off heading to May? Like, the saying, sell in May and go away.
Well, it could happen if
Because,
if they do
yeah,
that, you know.
yeah, the consensus right now, Wall Street is predicting significant uh, rate cuts starting March or April. So if the Fed doesn't deliver, it could easily turn around and bite us back. The bear could be woken up.
Mhm.
So yeah, bar chart again. Mega cap tech stocks finished the year with a gain of 54%, their best annual performance since 1999. So that's the year that led to the tech bubble the following year. So will
Mhm.
we see a tech bubble by next year once a lot of money that are on the sidelines, the 6.3 trillion, got tired of being benched and start pouring into the market. So I'm pretty sure it will definitely add its weight and pull the market all the way up, probably to bubble territories. So speaking of bubble, I'm not saying that the housing prices are in the bubble, but actually home prices, this was published November 20th. Home prices hit fresh record in September. So in the year that the Federal Reserve was already hiking up rates the fastest in its history, from 0.25 basis points to 5.25 basis points, that's 5% hiking rates. The house prices still hit the fresh record, a new record for home prices. So National Home Price Index Core Logic K-Shiller rose 3.9%. This is, I guess, the latest reading from the Association of Realtors. So this is hard to actually forecast. Imagine the Federal Reserve already trying to prevent or trying to slow down the real estate market, but still it hit a record high.
Well, they can't slow it down because people are still looking for homes, and the demand is out there.
Exactly.
I don't know what they're waiting for. It's either prices to go down or rates to go down or both to go down
Yeah,
before it
but
opens
just
up.
but the main thing that happened when they start cutting rates back in the pandemic days, the indirect, or somehow it trickled down eventually to the property markets, as the property markets got wildly crazy and the prices skyrocketed 20%, 30%. In Austin, it went up 20, 30, 40% in a year. So once they start cutting rates, better watch out, guys. Home affordability could even get more difficult or more challenging, because housing prices, it'll be skyrocketing too,
Well, that's
in my
also the
my
time
opinion.
that people were migrating out of these, these states into Texas,
True.
following the boom.
Uh, like with the work from home.
Hmm.
So that's one thing to watch out for once the Fed starts to cut rates. So top 10 most shorted stocks according to bar chart, we got Riley, 57% of its floating shares as of December 29 are shorted, followed by Fisker, Trupanion, Upstart, Beyond Meat, Novavax, Carvana. Let's take note of Carvana, because we have a chart on the following slide referring to Carvana. Biomea Fusion, Frontier Group, C3AI. So in case these money-losing companies are, to be loved again, with the exception of Carvana, because actually Carvana is one of the best, if not, it's the best performing stock of the year. There we go. So top 10 2023 performing stocks. Number one is Carvana. It's
Wow.
the most shorted stock, one of them, followed by Affirm Holdings, Coinbase, for nearly 400%, Symbiotic, AppLovin, Vertiv. I thought AppLovin was filing for bankruptcy at one time this year.
Well, that could have been App Harvest.
Oh,
That I know.
true. That could be a App Harvest, yeah.
Yeah.
So, and then Rolls Royce. Wow, there are more people buying Rolls Royce now. I guess
Oh,
the Federal Reserve has to tighten more. Looks like Wawi. It's not doing its
wow.
job on the property market. Property prices are still climbing to records. Super micro computer Duolingo. Oh, Nvidia is just number 10. Wow.
Yeah.
I thought Nvidia would be somewhere number one, but Carvana 1,000, what, 1,000%? We have to
Look at
see.
that. Amazing. Carvana. Uh,
1,000%. Oh yeah, from
Amazing.
$4 to $52. Jeez,
Amazing.
jeez.
Must have been quite a short squeeze.
Yeah, but as of 29th of December, 37% of its shares are still being shorted. So a lot of people are like being choked right now by this market rally.
Mhm.
This is crazy finding right there. So Dow Jones, the index, had its ninth consecutive green week, its longest winning streak since 2019 February. So another chart from bar chart. So Hong Kong stock market, Hang Seng has now declined for 4 consecutive years. So I think no other market can beat Hong Kong as the worst performing stock market in the world at this point. 4 consecutive years of negative. Not even a bounce. Well, it bounced a little bit from the COVID pandemic, I guess, but it's still down since then. So I guess we're gonna go to your stock picks for 20. What was your stock pick for 2023? While we have.
Well, one of them is one of the one most shorted on your list.
Mm.
That would be Upstart.
Oh,
I'm
okay.
thinking, once the rate cuts occur, it will open up the loan segment for homes, and low rates will mean more business for this AI lending company. So this company does not rely on FICO scores. It relies on other data points, and a lot of the customers are happy because they can get loans quicker
Oh, okay.
than than going through a regular bank
So
because
they
of
provide
the
loans.
yeah,
Let's
they
see.
just got hit for carrying some of these loans on their balance sheet last year, and investors didn't like that, and that caused their stock price to plummet. But I
Mm.
kept buying it on the downside and thinking it's still a good, it's got a good business behind it,
Mm.
and there's still a lot of small banks acquiring its business. So I think it's still got uh, a more to go.
Yeah. Well, counting its performance for this year, it's up more than 200%. So that's quite a good performance.
And that's with the rates not yet low.
Wow. Look at that. In 2021, it was as high as $390 a share.
Yes.
My gosh.
Yeah. In fact, I started buying it at close to that peak.
Oh.
Uh, um, and then, when they started putting the brakes on the interest tightening,
Mhm.
that's when it crashed.
Right.
But I kept buying the shares.
Mhm.
Oh,
Average
and
down. Mhm.
yeah, the next would be, I'm looking at OMAB, which is like one of the group of airports in Mexico.
Mhm.
There's a lot of business in Mexico going on right now. Tesla is building a factory there. Um, uh, their economy grew 30%, and tourism is still, you know, driving a lot of business to Mexico. So I think it would be good to invest in the uh, the airport group here.
Quite
Plus, it
volatile
gives
though.
out.
Yeah.
Yeah,
From 95 it
yeah,
went down to 650s and then now it's back up to 80s. But it's for the year it's up
yeah.
33%. So quite reflecting Mexico's growth.
hmm So we know our GDP in the US predicted to slow down,
Mhm.
but I think Mexican economy, along with emerging markets, is predicted to ramp up. So the next on my list would be, I think it's EWE, which is an ETF for the emerging markets in Asia, and Taiwan Semiconductor is in it,
Oh.
ETF.
Oh, it says EWW for
Oh,
Mexico and
oh, let
EWU
me let me
for
check
UK.
my. It could be EMG. I may have to look at my. Let's see. Oh, VWO. It's a
Oh,
Vanguard.
VW.
VWO.
I think I've heard of
Yeah.
it before, yeah. Vanguard Emerging Markets. China,
hmm
Brazil, Taiwan, and South Africa. So looking at its portfolio composition on its website, it's currently trading at 7.6 times PE ratio, which is cheap.
hmm
Total assets of 98 billion. Stocks. Yep. Number one is Taiwan Semi, Tencent, Alibaba, Reliance. That's in India, I believe. PDD, Pinduoduo. The company who owns no, not TikTok. What was the other one?
Timu.
Timu. Yeah.
Yes, I'm addicted to Timu.
Largest bank in India,
Good luck.
HDFC. And then Meituan
Yeah.
Dianping. I think that's like an Uber in China. Infosys is an Indian company. Vale is a big mining company. That's pretty diverse
hmm
there. Markets. A lot of it, 29.9% in China, 20% in India, 18.9 in Taiwan. Brazil is 6, Saudi 4. Oh, it has Saudi exposure too. South Africa, Mexico, Thailand, 3% and lower. Okay, that's quite diverse. Good set of picks, Wawi. Mm,
Yeah, for those that because it's hard for me to figure out these different companies in Asia and all these emerging markets.
right.
So it would be easier to get an ETF. The last one on my list is DUK or Duke Energy.
Oh, okay.
Um,
Utilities.
yeah, utilities.
Oh yeah,
They're
it's
they're
energy.
well, hmm
Down
they're not doing so
6.4%.
hot,
Mm-hmm.
but they do pay good dividend. It may, be a good play instead of getting treasuries.
Mm-hmm.
And they're diversifying their businesses. They're going into renewables, and they're always going to be around, right? Duke Energy is a big corporation.
Yeah. It has a market cap of $75 billion. Dividend of 4.2%, which is a little low than the short-term treasuries at this point in time. It's an electric power and natural gas holding company headquartered in Charlotte, North Carolina. It's pretty solid picks there. While we won for energy, which is the worst performing sector this year. If they come back next year, that'll be awesome, especially for Duke Energy
Mhm.
and the large oil companies such as Chevron and Exxon Mobil. I think Chevron is down close to 20%, Exxon as well. Exxon not so much, I think, but still both of them, the big oil majors are down for this year because of the oil prices. U.S. is producing a lot more oil despite the Saudi cuts, the OPEC mafia trying to cut their production, but it hasn't affected the oil price. It's been down 20% at least. So my picks for the coming year, I would say is I'll still stick with the big tech. Big tech meta platforms, it more than tripled this. Did it more than tripled? I don't know. Let me see. For this year, it's up 183%. So that's pretty good. Yeah, at one point it was $120 since the start of the year. But I think I'm sticking with big tech. Mostly, I would tilt more into Amazon. Could be
Mhm.
Amazon could have a good year coming up. It is clear now that a lot of tech stalwarts like Netflix can now produce a lot of cash, where Disney is unable to do so on its streaming, despite its lots of trademarks, Marvel or whatever. For some reason, Netflix is way better in terms of generating cash at this point. Paramount is, struggling. Even HBO, uh, which is owned by Warner Brothers, is having issues generating profit. So sticking with Netflix, sticking with meta platforms, Google obviously still has plenty of cash, and Amazon would be number one. I'm not gonna put a lot of
Mhm.
weight to Apple just because it has slowed down quite a bit recently. It's actually projecting a weak performance this year, um, despite being the largest company out there. Anything out of the ordinary that you think Huawei would surprise us next year, such as Carvana?
Oh, well, um, since the exit of one of its competition, AUR, Aurora Innovation, is one of these trucking companies going into like automatic, automated trucking here in Texas.
Hmm.
Um, so without the competition from Too Simple, I think they have a market, and they just have to go through the hurdles of regulations to get these trucks rolling on Texas highways. AUR.
AUR.
Mm-hmm.
Let's see. For me, I would think anything. Wow, it's AUR is actually close to 300% this year.
Mm-hmm.
Um, a
It
dollar,
uh
dollars.
it jumped up after Too Simple exited the US market and went to China.
Wow, that's amazing. Hard to catch these companies.
NGL. NGL is another one.
Mm.
See, we're producing a lot of oil, through fracking, and NGL supplies the hydraulics that goes into the fracking system.
Oh, I
So
see.
it's a good supplier.
No, it's almost 400% this year. It's
Yeah,
amazing.
it's
Even oil is underperforming this year, but it outperformed.
those suppliers are doing good, and then of course the distributors
Mm.
or the midstream like Energy
Pipelines.
Transfer. Yeah,
Mhm.
ET.
Yeah.
ET is one of my favorite too to do well next year.
Mm.
In different scenarios, good and bad scenario, geopolitical. These two should do okay, NGL and ET.
True. Because they'll still transport oil regardless. People need oil.
Mm-hmm.
So just jumping onto I guess this will be one of the last slides for the year. Is we're coming to an end. It's December 30. Can't believe it. But, 2023 is almost over. Just less than, well, 26 hours away. So this is a Bloomberg article on the 28th. It says everyone got burned. Wall Street missed the great stock rally of 2023. Stocks were supposed to slump and bonds rally as the Fed drove the US into a recession. It didn't play out as strategists expected.
Oh.
So Morgan Stanley obviously had a bearish target. Bank of America and colleagues were telling clients to prepare for a plunge in treasury bond yields. Goldman Sachs were talking up Chinese assets as the country finally roared back from COVID. Blended together, these three calls: sell U.S. stocks, buy treasuries, buy Chinese stocks, was the consensus in Wall Street. All of these didn't happen, but the exact opposite. Well, Chinese
Mm-hmm.
stocks kind of like, float in the middle and then dump down a little bit and back up, but
Mm-hmm.
definitely sell US stocks. If you follow that advice, well, too bad. It wasn't this year. It didn't happen this year.
Well, I didn't sell any U.S. stocks, but I did invest in certain Chinese companies.
Yeah. It's hard to find out. And according to this graph, so a lot of people actually, made their money work for them still because money market was yielding at 5%.
Mm-hmm.
So 7 trillion or $1.3 trillion have flowed into money market. 276 billion flowed into bonds. Only 95 billion flowed into US stocks and 70 billion non-US equity. So a lot of money. I'm interested of seeing the history of this, but unfortunately this is the only chart that we have in terms of flows for this year. So a lot of money have missed the stock market rally. A lot of money are still sitting on the sidelines, $7 trillion worth. So that's something to keep in mind in case, what do you call this? By next year, should the Federal Reserve start cutting rates? Because that will definitely